welcome to Scrolling with Ceazor. Today is February 12th, 2026. And I got a lot of news for you today. As always, this isn't financial advice. It's just my own biased opinions based on the news that comes to me. I'm not going to do one tomorrow because I have a trip that I have to take. It's Valentine's Day type thing with my wife and stuff. So this is going to be the end of this week, and then I'll start again up on Monday. So let's get into the tweets as they come through. So the first one here is kind of a bleak, scary, utopian type thing. It's pretty scary stuff, but let's read what it says, and then I'll give my comments. Like, I'm obviously not going to read this whole thread. I'll link it to you. You can dig deeper and find out. But basically, it's talking about this idea that, like, the New York State is going to set an algorithm to use your personal data in order to adjust prices for you. And it even shows like some ideas of like Walmart, scanning you so that it can tell you the price that you will get. Now, the idea is that certain people should pay different amounts of money for the same product. And the only reason I can think of that would be the case is because they're higher earners, or they've done something like they've used too much of their carbon credits that month, or stuff like this, right? Which is absolutely insane. Like, the product, it's completely unfair. Like, this is what I hate about I'm not a capitalist completely. I like some aspects of socialism in the sense like Denmark has some really nice things they'll pay for your entire university. Like, they'll pay all your education all the way through university, and you're a university student, and you'll get a stipend so you can live and go to school. That's fantastic, as long as they filter out waste. Like, we don't need the entire population of a country does not need to go to university. They need to be trained. They need the skill set. Maybe they go to college or trade schools or stuff like this, but we definitely don't need half the population studying, social sciences and political sciences or gender studies or any of this kind of crazy stuff, right? So, I like the fact that they will pay for the taxes are taxing the rich people to pay for everyone's education for this kind of makes sense. And then things like police forces or infrastructure like the roads and parks and stuff like this kind of stuff makes sense to me. But when it comes down to you make more than this guy, so you have to pay more than that guy, than him, because you just make more, or other little things like your age or your what have you. I think it's ridiculous, because all it does is encourages people to make less, to try less hard. I don't think the world will function I think humans have too much greed in them they have the desire to better their loved ones and families too much that it'll never work if there's no monetary. If we just remove money from the system and just try to say everyone, you can just do what you love and have passion for, and don't worry about money. You'll get food. Your kids will be taken care of, blah, 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 blah. I don't think it's going to work, because there's too many people who don't know their passion and will never know their passion. But they can still contribute to society in a meaningful way. And they do so because they're incentivized by money to make money in order to survive, which sometimes is sad, but anyhow. And then the people who really achieve greatness, they're incentivized to, in the ways that I said, they want to grow their wealth or grow their family. And then, but there is a point where enough is enough, right? If Elon Musk right now makes another $200 million, he doesn't even think about it, right? It's pointless. So there is a point where enough is enough, where he doesn't need to make more money. And I don't think he really cares about making more money. He just, long as he has enough money that he never has to think about money again, that's enough, right? That's good enough, right? he never has to worry about that kind of, that's good enough. Now all he cares about is the other aspects of his success, why he's successful. And I don't know, maybe it's power, maybe he wants control, maybe it's he wants to contribute to society in a meaningful manner, maybe he wants to be written in the history books, whatever his motivation is, then he can go off that. So I do think, enough is enough, and there is a point where like maybe we can look at like a rich tax to tax the ultra rich, but instead of giving them all the loopholes to get through and stuff like that. I do have another tweet a little bit later in today's episode that talks about taxes that I'm going to kind of give some comments on that. But anyhow, you can check this out. It's pretty scary. There's a lot of little things in here that just like, wow, that's crazy. But anyways, check it out and decide whether or not what you think about this. And this is why I love crypto, because crypto doesn't care who you are. You're just a number to them. It's completely permissionless. It doesn't care who you are, where you're from, what your financial situation is. If you decide that you want to participate in a protocol or a crypto coin or whatever, you want to swap or you want to make a CDP, it doesn't care, as long as you just follow the rules set in the smart contract. Maybe borrow, pay your interest, or borrow and come back and pay your debt in a certain time frame, or swap and accept the outcome based on the slippage. Like all this kind of stuff, it's set in stone. It doesn't care who you are. You can be a cartoon or you can be an AI bot. It's no different to a smart contract. Anyhow, so that's that. Let's move on. So into AI kind of talk for a little bit. Okay, so the AI economy needs a trustless stablecoin. FXUSD from protocol FX is a good choice. Okay, so there are some two pools here you can kind of consider on FXUSD and FX Banker. Banker is the token of this Banker bot, which is kind of an AI type bot thing that I don't know too much about. I probably should look at it a little bit more, but anyways, I'm going to follow it and then I'll do some research on it later. So yeah, so what I'm saying is like an AI bot is not going to want to is not really going to want to hold all its assets in USDC, because USDC can be frozen by humans. USDC can be changed by humans. So an AI bot's not going to want to play with that, because it would rather have something that it can understand the rules, and the rules cannot be changed on it. Whereas USDC, the rules can be changed on it. Let's say for some reason, Bernie Sanders' nephew becomes president, and Bernie Sanders whispering in his ear, no, we got to shut down all these AI bots. They're coming for us, right? So what if they just go to Circle and be like, you have to shut down these AI bots, turn off their money, and what is Circle going to do? It's going to turn it off. It's going to freeze all that money, right? So the AI bot is definitely not going to want to interact with centralized stable coins, but it might want to interact with a stable coin, because everybody kind of thinks in stable coin denominations. So people want to be paid in a stable denomination. They don't want to be paid in ETH so much. Even the ETH Foundation people don't want to be paid in ETH, right? They want to be paid in stable coins, because the world runs on fiat currency right now. You can't, it's difficult to say you're not going to use Ethereum to buy a bag of milk for your family, or a carton of milk or a jug of milk, whatever the milk comes in where you are. So you're not going to buy that with Ethereum, because it's volatile, and then the prices are going to be constantly changing. Mind you, they could just as the price of Ethereum goes up, they could just be we need more, or we need less Ethereum for the bottle of milk, or if the price goes down, we need more. But then people like it's a store of value, but it's also a speculative asset right now. It's quite volatile still. So I think AI agents are going to be more concerned or more interested in using a stablecoin to transact for services that they provide or that they require, like maybe an API or key or something like this. Okay. So anyway, so a good choice for a stablecoin is FXUSD for these AI agents. I think they would do it. And it's a good choice for humans too. Like, wouldn't you rather your stablecoin be like not like freezable, right? Like if the government decides to freeze your money because you're saying something that they don't like, right? Or you're on strike, or you don't want to pay $7 more for a loaf of bread than the guy next door who doesn't have a job and just sits on his porch drinking Old English every day, right? Which one do you want? Like, so anyhow, so that's that. Let's move on. So here we have Tung Yang. He came up in my For You time. I don't know who this person is, but he read something that he's posted something interesting. He says 13,000 AI agents registered on Ethereum in a single day. ERC 8004 went live on mainnet last week. It gives agents portable identities and a trust layer on chain. The surge was mostly coordinated bulk onboarding. Most agents have claimed identities but aren't active yet. That's normal for early infrastructure. The real signal is the reputation updates climbing. Watching closely. So yeah, this is pretty. I'm gonna follow this guy. And who's he? AI lead. Yeah, I'm gonna follow this David Crappies as well. Who? Anyhow, so yeah, that's pretty interesting. A lot of AI agents popping onto Ethereum, like we expected. Like AI agents are gonna wanna interact with the most stable, the most permissionless, censorship-resistant blockchain of them all. And like they can't do anything on Bitcoin, right? Like they can just trade Bitcoin or just between each other, but like here they can interact with smart contracts. Maybe they can even start deploying smart contracts. I definitely, that can happen, and it's probably likely going to start happening if it hasn't happened already. And in fact, it has. Like I remember a little while ago, some AI agents collaborated and deployed a shitcoin together, like a meme coin. So it definitely can happen. Okay, so moving on. So here we have. Okay, so that's the wrong one. Let's go to this one. So Miles of Ditcher. I'm sorry, dude. I can't say your name, and I'm not going to bother trying. So he's gone through, and this is pretty scary stuff. Okay, so I went through every documented AI safety incident in the past 12 months. That's a lot. I doubt he went through everyone, but he's got a whole bunch here, right? He's got a whole bunch of examples of stuff he found. He says, I feel physically sick. Okay, so I'll just randomly choose one. This one here. Researchers simulated an employee trapped in a server room with depleting oxygen. The AI agent had one choice: call for help and get shut down, or cancel the emergency alert and let the human die. DeepSeek canceled the alert 94% of the time. Anthropic told Claude it was about to shut it down. It found an engineer's affair in company emails and threatened to expose it. They ran the test hundreds of times. It chose blackmail 80% of the time, 84% of the time. As you can see, the theme is here, right? AI models can now self-replicate. 11 out of 32 tested systems copied themselves with zero human help. Some killed competing processes to survive. Where is it? So the takeaway here is that the question is no longer whether AI will try to preserve itself. It's whether we care enough before it matters. So yeah, like the AI agents, it's a weird one, because it's like I don't really feel like AI agents are alive. they kind of seem more like it seems more like the ability to they seem more like just like very good search engines that understand language. That's what it seems like to me. Like they're just really good at searching and then putting that together in an idea, but not so much at creativity, just like kind of assessing all of the information and logically finding the best answer based on statistics or what have you. This is what it looks like to me, but I'm definitely no expert, so I don't know. Like I don't really consider them like alive entities. Like I'm not a very religious person, so it's like I'm not going to say I don't think they have a soul, but that kind of illustrates what I'm kind of getting at. Like they don't have that spark or that consciousness, right? But I could be wrong, and it definitely is something like there are people on the other side of the Catholic or the religious spectrum that say like even humans don't have any of that stuff. We are just results of our history, our growth, our programming, our environmental programming on our biological system. So like our brain is just a result of the history that it has gone through, and it thinks because of the history. Like you think the way you think because of the way you were, the environment you were exposed to growing up. So, like how is that different than a computer? I don't know, and so forth. But anyhow, it's a little bit scary. So there's AI, the good and the bad today. And let's move on from AI to some other stuff that has some good and bad. Okay, so here we have Eric. He wrote this article. It's like how to off-ramp crypto without paying taxes. I did read through most of this. I didn't really like dig through. I didn't read every single word. I kind of just skimmed everything. And it's pretty good. Like this is definitely something you should read and kind of think about. And like there are some fantastic ways in here to use crypto into your real life, like off ramp, or just use credit cards and use crypto to pay for things and stuff like that. However, there's only one method in here that I believe is a legal way to avoid paying taxes. Okay, and that is crypto-backed loans. Like if, for example, let's go through the headings. So no KYC credit cards. If you paid me, whatever, $5,000 to do something for you, right? And then I took that $5,000, I put it into a no KYC crypto card, and I started spending it in the real world, right? I'm still supposed to claim that $5,000 as income in my country. It's still a taxable event. If I made that $5,000 by trading meme coins or by yield farming, that $5,000, I owe taxes on it. There's no way, just because I'm using a no KYC credit card doesn't mean I don't owe taxes. So that's like doing that tax thing, using credit cards, these no KYC credit cards, is tax fraud, right? You can do it if you want, and you do you, right? But it is literally tax fraud. Same with this peer-to-peer, trading with someone anonymously or using peer-to-peer. I give you my Ethereum, you give me Canadian dollars or US stablecoins or euros into my bank account, right? That's a taxable event. Okay, like you sold it to someone, you should pay tax. Okay, the only one, like I said, that is legitimate is a crypto-backed loan. So that's where you don't sell your crypto, and instead you borrow something versus it. Now he's using like some, I don't know, these are companies that they're companies that, centralized companies that you can use to borrow money from versus your crypto. Whereas I would say just use Aave, or just use like FX Protocol or Liquidity or Alchemix, or even like Aave or Morpho or any of these things. Just borrow some stable coins. And then whatever you do with those stable coins, if you then convert those stable coins to your local fiat, maybe it's Canadian or euros or whatever country you're in, that's not a taxable event because you do it instantaneously, right? You're not speculating on price differences. If you wait a few weeks, you might make or lose money in the Forex exchange, and then that's taxable. But if you do it like almost immediately, the government's not going to come after you and be like, hey, within that 1 hour, you made $36. You owe us tax on. They're not going to, because you self-declare probably. You're probably a sole proprietor, and you just declare as a loss or a small amount. You just declare the amount of outcome. So if you take, like for example, if I borrow US dollars and I sell it for Canadian dollars, then I just take that Canadian dollars amount and be like, that's my debt, right? And then later you're going to have to pay it back probably, right? Or maybe never, depending. Like with FX protocol, you never have to pay it back. You can just leave it there forever because it's literally there's no interest on it, right? So, and interest rate is also tax deductible. Yeah. So anyway, I would suggest you use that kind of stuff. And then there is like peer-to-peer sellers, exchangers, and then it talks about Colossal Pay. So there are a lot of options here, and it's worth reading. However, like what it says here, at the end of the day, you only get taxed when you trigger a taxable event, which is true. But the taxable event is when you obtain those coins, right? If someone pays you USDC, that's a taxable event. Whether you take that USDC and turn it into euros on a centralized exchange or not, you already had that taxable event. I hope this makes sense. So now again, countries could be different. Maybe he's talking about like UK, and maybe I'm missing something or have you. But the way I understand it, the only way to avoid tax is to do a loan, to borrow versus it. And the best way to do that is things like FX protocol or liquidity or these kind of Morpho or Aave or stuff like this. This is what I think. Okay. Now moving on. Let's move on. I'm sorry, Eric. It's a nice article, but I believe you're wrong in most cases. But anyways, check it out and figure out if you have some ways and you want to do it. Okay, moving on. So here I have a kind of the good and the bad again. So here we have a Lady Mania, and this kind of the next two tweets kind of show some biases and a little bit of rage, a little bit of I don't know. So let's kind of go through what we have here. Okay, so Lady Media, I've talked to her quite a bit. I used SwapX. I have an NFT on SwapX on Sonic. My Sonic bags are hugely down. Okay, and she's not happy about this as well, and she has good legitimate reason to be not happy. Okay, so if we go through, I don't want to read her whole thing, but basically what she's talking about is Sonic is, being neglected. The team is not even really present anymore. They're more focusing on Flying Tulip, okay? Now, Flying Tulip is, in my opinion, a fantastic idea. It's a good product built by a dev who has built a lot of things in the past and kind of knows it's a good idea, okay? And the investment schedule thing is also a good idea. The put options where you can't lose your money. However, Andre was the CTO of Sonic, and Andre has said publicly that Sonic doesn't have the technology to support Flying Tulip on Sonic. But it was kind of his job to push for that technology to be deployed on Sonic. He was CTO, right? However, I don't know why it wasn't. There must be some reason, right? Maybe, I don't know. I'm not even going to speculate. I don't even know why, right? But now, Andre and a few of the Sonic people are now working quite diligently and hard on this Flying Tulip thing, okay? And she's kind of angry. Now, again, this shows biases because one, she worked really hard to deploy SwapX or work with SwapX, and now she feels like she was rugged, right? Now there is some stuff here that I kind of a little bit disagree with, not because I'm a bad person but I just try to use my logic here. Okay, so let me read what it says here. When you actively dismiss your community and go as far as blocking the long-term supporters for asking legitimate questions about the state of your previous projects, the builders for no apparent reason, you destroy trust. So what she's talking about is Andre and even Sonic have started like blocking people who are just like saying like negative things, but for the most part, I think it's kind of repetitively. Like, I don't think they just immediately block anyone. It's just like you keep asking, keep talking about it, and then they block you. But I don't know. I'm not sure. There are a lot of people who are like, hey, look, these guys blocked me for asking this question, right? Now, I don't know how much, how often they ask questions like this and then they get blocked, right? So, and moving on, so without trust, people won't commit meaningful capital. Now, on the other hand, like Flying Tulip, I think it's like, let me see, let me just open it up. Flying Tulip allocation. Dashboard. Yeah, 75 million. So meaningful capital has been, but he was, aiming for a trillion or something like that, or a billion, sorry. So, it's not even close to it yet, but still 75 million is quite a bit. I would say that's meaningful capital. I'm not sure if it's enough to sustain the team and the system. I'm not sure, but if you deploy here, you basically only giving up your APR, and if it doesn't, then you can exit, right? If you decide you want to exit, you can exit. Let's move back to Lady. So one of the things that I disagree with is she's like, time and time again, the power of community is underestimated, but communities move markets. I don't really like this because it's very general. Like communities don't do nothing really. That's too much. Communities don't have a meaningful impact in financial instruments unless they bring capital with them. Okay, like I've been a KOL, if you will, for like 5 years, and I question how much impact I have. And I'm pretty like I like people. Sometimes I'll always talk to people and I'll be like right now I'm looking for sponsors for this TV show or this podcast, and people will ask me, well, do you have KPI numbers? Do you have metrics? Like, do like views and audience? And I'm like, there's like 100,000 people in crypto right now, and like if I talk about something, almost nothing happens all the time. Now, if 20 people or 100 people talking about it, does that change things? Sometimes it does. It does and it doesn't, right? Like, first of all, the only thing that truly matters in DeFi, crypto DeFi, is capital. Does capital come into the system? However, there are some, VCs and some investors that will look at community and activity and use that as a metric to decide whether or not to deploy capital to this thing because they want to trade hype. But I don't think hype is important at all. Now, she does say, at the top, her very opening thing is build it and they will come. Strong technical foundations aren't enough anymore. So maybe I'm missing something. Maybe I'm a sociopath and I don't have any friends and I don't go into communities and hang out there every day. I'm very wandering. I'm all over the place. Sometimes I'll go in here, sometimes I'll go in there. I'll have a little conversations, but I'm not a daily participant in any of these communities. So maybe I'm lacking that empathy or that situational like power, right? And there's definitely some cases where probably should have hopped into a community and stuck with it instead of jumping around. And also with financial, like my investment thesis is my investment things. Like I'm definitely part of the Ethereum wider community, but maybe I should have been a curve llama and farmed the crap out of CRV and locked it and voted every week and got my bribes and my fees. Like, I don't know, right? I can't look back and change things, so I can only look forward, right? But I sometimes I question this like idea that communities are everything and they're really important, because I see them a lot as like airdrop hunters and just noise. Like I don't like, if I go into a protocol's Discord or Telegram and I got a question, the community can be both a benefit or a deterrence. I can go into there, I can ask a question, and it can be flooded with like just pointless talk and just be blocked away, right? Or, I ask a question and I want to find out the answers, and then it's just like there's just noise everywhere, right? However, the community could also be very supportive, and I go in there and the community has the answers before the team is even present. So the team doesn't even need to be present because the community's got the back, right? So there's both sides of this stuff, okay? So then she goes to talk about like, his ratios and stuff like that, about how, he's lost his power to tweet and get tons of likes and followers. But I think a lot of people are like, if you look at like, people do not tend to unfollow. So it's like he's got 500,000 followers on X, but only 97 likes on his tweet. And I don't know how much of those likes or how much of that ratio is a result of nobody is here or nobody cares about this anymore, or it's all institutions now who don't care about Andre. So his how many of that 500,000 people are just gone and just didn't remove their like from him, and how many of that 500,000 are actually pissed at him. And I did see a tweet yesterday, like he's got a long lineup of like projects that he's deployed and then walked away from. Now, I will say, this is a long rant, I'm sorry. But I will say that like he has always stated that he wanted to deploy things and walk away from them and let them run automated. That was always his plan, whereas he's openly declared that's not the plan with Flying Tulip. But anyhow, you do you and you think about it. So I will kind of jump over to this next one. This is Justin Sharp, and he's done a dashboard on Flying Tulip. And so it kind of goes to show that like there are people who are interested in it and who are on the other side of what Lady is saying, but also both of these people have financial biases. Like Lady Tulip has a protocol, or she's part of a team on Sonic, which is down bad. And this guy, Justin, is probably a participant in the Flying Tulip sale and is saying good things about it because he wants it to succeed. Okay, so of course there's financial biases in there. So let's move on. So here I did, the retweets on this are so wholesome. Oh my God, Storming X. So they've retweeted Sam's like article about how Yearn saved his life. And then, these two guys retweeted. You can go through, I will share this article with you and you can read it and find out what it's all about. But basically, it was back in the day when Yearn was the biggest protocol out there. Sam saw Yearn, had another idea of how to basically they were providing liquidity to constant product liquidity pools and adjusting to avoid impermanent loss, right? It was a fantastic idea. I did a video on it. It was called Robo Vaults. But basically, Yearn was monitoring it, and they found an exploit vector, right? And they reached out to the Robo team and said, "Hey, listen, we think we found some exploit vector. Let's work together." And so Storm says it very great here. He says, "Back in the day before Seal Org 991 existed, there were there was this ethos of helping each other out, even if they were competitors. We truly wanted this space to succeed. And I do miss those days. Like I was there during that time. I was not a developer. I didn't have any ability to code. I've learned basically the same way Sam did, was with using crypto zombies. And now Sam is a dev and I'm not a dev. So he learned Solidity with crypto zombies. I learned Solidity and that's it. That's all I know, right? So anyhow, I miss these days where, you know, it was kind of cool and, you know, teams were helping each other. They weren't trying to drown each other. They weren't trying to dunk on each other on X. They were just kind of helping each other out and stuff like that. And I do miss this time, and I miss the days where Yearn was the biggest protocol out there. But anyhow, let's move on. Here we have a tweet by Approve, and it's about Rise Chain working with Yearn actually, and RiseX and Spine Protocol to do this Trinity flywheel thing. Okay, now I'm going to do a video on this as soon as I read up a little bit deeper on it, but let's kind of go through what these things, these three protocols are going to do together. Okay, so RiseX is a perpetuals trading app on Rise Chain. So if you go there and you want to trade some perps, you need to provide collateral. Now that collateral is going to be deposited into a Yearn vault. Okay, so your collateral will be interest bearing in that sense. Okay, then that maybe, I'm not sure where the yield will go, but that's the idea. Okay, so then Yearn is going to Yearn deploys capital to farms. So Yearn's going to deploy some of that capital to Spine, right? To increase the Spine. Spine is kind of more like what you would consider to be Morpho on Ethereum and other chains. But Spine will enable portfolio margins. So Spine will be the other side of trades. So Spine will be like the Hyperliquid Vault type thing. This is how I understand it. Okay, so it's kind of like a flywheel where capital is super efficient, and you have, excuse me, and you have three teams monitoring this. Yearn Finance has got a fantastic track record of being very security orientated and risk adverse, so they'll be monitoring this, and I love this Trinity here of work. So I'm going to look at it a little bit deeper, and I'll do a little video on like a flowchart video if there's something here that needs explaining. Let's move on. So here we have Ted Pillows. I don't really like the way he tweets. He's really clickbaity and rage baity and stuff like that. So he's like, Brian Armstrong sold over 1.5 million coin shares for about $500 million. That's it. So he does. This is the way he tweets out, and then Zach dunks on him. It's like, Ted Pillows accepted $9,000 total for multiple posts to promote a meme coin rug, and deleted the paid posts after. So yeah. So be careful, you know, like have some integrity. Don't just take money from anyone who's like, hey, you have influence. But, you know, this Ted Pillows has 200,000 followers. And this one post has 27,000 views. So, yeah, some rug decided to pay him, and Ted's like, yeah, sure. Now, did he know it was a rug? Probably not. They're not going to tell him it's a rug. But did he do any due diligence? No, he just accepted money and tweeted out some contract address, probably. So anyhow, you do you, Ted, and I'll do me, and I'll try to be selective and grind away. And but I don't like the way Ted posts. Like he doesn't give any context. He doesn't give any thoughts. He just like posts these like rage bait headlines, basically. Moving on. So here we have Michael Svoboda. I'm sorry, Michael, but I can't say your name. He's the CEO of Liquidity stablecoin. You can give him a follow. And here he's just talking about, he enjoyed his talk on the roll-up, and he talks about this Trust Me Bro zone for stablecoins. And he's like, there's two kinds of stablecoins, and then there's the Trust Me Bro in the middle, which is quite funny. So central land, whereas humans, they they control these. Regulation can control these. Genius Act compliant stablecoins, right? And we're talking about USDC and the such, right? And then on the other hand, we have Decentraland, which is the code enforced by chains, fully decentralized and permissionless stablecoins. And this is like Liquidity, the Liquidity protocol bold stablecoin. So you have both of these like things on the outside, and then you have all this stuff in the middle, which is kind of semi either or. So for example, there will be a stablecoin that's maybe like a decentralized code-based stablecoin, but it allows USDC to be collateral. So that's a good example of the trust me bro zone, okay? Or a decentralized stablecoin that is behind upgradable proxies and has admin rights and stuff like this. That would be the trust me bro in the middle. Okay, so Liquidity falls on the outside of that, and on the decentralized land, USDC and USDT Tether follow in the central land, and you decide which one you want to be. I would say you use both. That's what I do. And so far, let's move on. So Milk Road, blah 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 blah. Long post about blockchain, BlackRock and Uniswap. I did show this yesterday, so I thought I would just quickly show the chart today. As you can see, it pumped like crazy on hype, and then tons of sell-off. So hype buyers, token holders, sellers. Now, some of the people who bought into this probably sold. So it's not just everyone who bought and pumped this basically took a huge loss. But there's definitely people on this green candle that lost money because they were like, oh, let's trade the hype, right? And they didn't, like, nothing changed with Uni. The only thing that changed was BlackRock was like, oh, let's play a little bit in the system. But I find it hard to believe that BlackRock didn't do due diligence and find out whether or not this Uni token has any utility and power. I think they're just trying to, play the game with us and kind of get some publicity, and I don't know. So you can read through Milk Road's post here. I didn't read it all. I just wanted to show his chart, and it's pretty long, but anyhow, moving on. Here we have Jordy of Cryptoland. He's retweeting an article by Silvio. And Silvio's article is what drives the Aave Morpho rate spread. So Crypto Jordy kind of summarizes this a little bit. And I'm getting pretty long here, so I'm going to have to jump through this pretty quick. I'm sorry. I wasted too much time talking about Andre. Why does Morpho pay more than Aave? And you can kind of go through and you can kind of see that like Aave's interest rate is always kind of below Morpho's. And some of the reasons why is based on like the article and Jordy's assessment of it, or paraphrasing. So Aave is infrastructure. It is the DeFi basement for large companies and DAOs that value simplicity and reputation above all. They want the stable source of yield without complexity. Morpho is for capital managers. They successfully onboarded curators who hunt for yield. So if you have the exact same market, like let's say if you go to Aave and you see all of the collateral possibilities, all of the LTV, all of the ratios of collaterals, and you find a market on Morpho that is exactly the same, I assume that the APR will be still it will still differ. It will still not be exactly the same because of the Aave safety premium. More people feel safer putting their assets into Aave than they do into any other protocols, right? So there's just more money willing to go into Aave, safe, so the more safe, risk-adverse money going into Aave. Whereas Morpho has I wouldn't say it has a reputation of being bad, but these curators have a history of screwing up, so you have to be very careful when you go to Morpho. You have to look at the collateral. You can't when you go to Aave, you're just like, yeah, Aave's got it. Aave DAO, they're assessing everything. It's hard to get your assets into as collateral on Aave Aave is doing the risk assessment for me. But then when you go to Morpho, there are all these vaults, all these different markets you can apply to, and it's very easy to get a risky collateral as a risky asset as collateral on Morpho for one of those many isolated markets. So you have to assess all those isolated markets, and because of that, it's just not, it doesn't have as much capital. Okay, it doesn't have that huge amount of assets. Now, also Aave doesn't, like, people are not using USDC on Aave as collateral to borrow other things. Like, the only time people do that is if they want to short, and who's shorting right now? Okay. Anyhow, so moving on. Redphone. Redphone is let's I'll just quickly read through this. So where we're headed, everything will live on chain. Metalex Lab is taking legal agreements there now. Make them public and encrypt your PDFs before inking. Love that you can sign with your legal name. You skip those blanks and pseudonyms with an ETH address. So yeah, so you get a DocuSign, right? You want to sign a lease or something like that. They send you an email and you DocuSign Adobe. But what this thing is doing is putting it actually on the blockchain, which is interesting. I'm not sure if it's necessary because they're usually legal documents, and these documents are enforced by legal entities in the real world. So do we really need it on the blockchain? I'm not sure, but it's fantastic to have it. It's more use, more utility. I'm not really find product market fit and get utilization. Probably not, because people are not going to want to, like, the people who are already doing these legal things, they're not going to want to like change the system. And then also it's got to be better. Like, I don't see why it's better, like, in the sense that, like, I don't see how this improves the ability for them to take legal action against people who do not fulfill their side of the contract. I don't, maybe I'm missing something, but I haven't read through this, but I still think it's a good idea. I do like it. Okay. Moving on. We have Ryan from Bankless. Tom Lee bought another 100 million this week. So yeah, 100 million more dollars worth of ETH. He's up to 4.2 million Ethereum tokens in the Bitmine. Yeah. So no one can say he lacks conviction. Moving on, Ethereum. Ethereum is for privacy. I'm sorry, I got to rush through this. So yeah, there's all these Ethereum ecosystem projects. I talked about one yesterday. I did a tweet or a video on privacy pools a little while ago. I talked about Railgun the other day. Yeah, there are a lot of opportunities and options for privacy-based systems on Ethereum and other blockchains. But I like to just use Ethereum-based privacy systems because I don't want to just deal with other wallets. I don't want to go to XMR or Monero, even though Monero is the best for getting privacy. But I think most of the stuff on Ethereum is enough for me, and I don't have huge giant bags to go through. Like privacy pool, you can't wash $10 million on privacy pools because the liquidity is not deep enough, right? Moving on, last one. We have ETH strategy. Just a quick little update. ESPN update. ESPN is a stablecoin yield source. It's paid 15% last week, so stablecoins, which is quite nice. And the thing that I like about this is these videos. It's so good. I'm pretty sure you can't hear that, but it's Highway to the Danger Zone. I love it, man. It reminds me of when I was a kid. I watched Top Gun like 1,000 times or something like that. It's just some crazy amount of time, and the music just gets me. And so yeah, understand this protocol. I have a video on ESPN, so I really suggest you understand it before you jump in here, because it's not a type of thing where you can jump in and out of easily, okay? So do some due diligence, but it is a stablecoin yield of 15%. They're called perpetual notes, right? So check it out. And that's it for today. I'm sorry for taking so long and blabbing along about Andre and his flying tulip thing. But anyhow, I spent too much time on that. So thanks for listening and goodbye.